Attention seniors, please take a few minutes with this because the information ahead could put real money back in your pocket. Most senior homeowners in the United States are paying more in property taxes than they are legally required to. Not because of any error in their finances, not because they filled something out incorrectly, but simply because there is a program available to them that nobody ever pointed them toward. A program that has been sitting in state law for decades, quietly available and almost entirely unclaimed by the people it was designed to help. Research from the AARP Foundation confirms what local governments have largely avoided making public. Millions of older Americans qualify for a legal reduction in their property tax bill every single year, and the overwhelming majority of them have never once submitted an application. They continue paying the full amount year after year, completely unaware that a portion of what they are sending to the county was never legally required of them in the first place. And here is the part that makes this even more frustrating. Even among the seniors who eventually do learn about this and take the time to find the application and fill it out, a large number of them still end up getting denied. Not because they were ineligible, not because they did anything wrong intentionally, but because of one specific part of the application that is almost never explained to anyone. When that part is incomplete or missing, the county processes the application exactly as submitted, finds it deficient, and closes it. No phone call, no letter asking for the missing piece, just a denial notice weeks later and another full year lost. This video is going to cover all of it. What the program is called, how it actually works, what the savings look like across different states, why so many eligible seniors have never heard of it, what causes most applications to get rejected, even from people who genuinely qualify, and the retroactive filing option that exists in certain states, which means if you were eligible in prior years and never knew, there may be a path to recovering some of what you overpaid. To put a human face on why any of this matters, think about a retired educator living outside a mid-sized city in Illinois. She is in her late 60s. She bought her home more than 2 decades ago for around $160,000. Over the years, property values in her area climbed steadily, and by 2024, her home was being assessed at over $300,000. Her annual property tax bill had risen to $7,400. She paid it without fail every single year because she believed that was simply what she owed. It was not until a conversation with a neighbor that she first heard the words senior assessment freeze. She went to her county assessor's website that same week and discovered something that genuinely shocked her. She had been fully eligible for this program for 3 consecutive years, 3 years during which she had paid her full tax bill when she was legally entitled to pay considerably less. The county had never informed her. No letter, no notice, no mention of it anywhere on her tax statement. She only found out because a neighbor happened to bring it up in passing. Her situation is not unusual. It is representative of what is happening quietly to millions of senior homeowners across the country right now. People who are responsible, financially careful, and doing everything right, but who are overpaying simply because the information never reached them. The program at the heart of this is most commonly known as the Senior Homestead Exemption. Depending on your state, it may go by a slightly different name. Some states call it the Senior Property Tax Exemption. Others have their own specific titles for it. But regardless of what it is called where you live, the core mechanism works the same way. Property taxes are calculated based on your home's assessed value. What this exemption does is reduce that assessed value before the tax rate is applied. So if your county has assessed your home at $300,000 and your state provides a $50,000 exemption for qualifying seniors, your taxes are calculated on $250,000 instead of the full amount. That lower starting point applies every year going forward for as long as you continue to own the home and meet the eligibility requirements. Certain states offer an even more valuable version of this called the Senior Assessment Freeze. Rather than simply reducing your assessed value by a set amount, this option locks your taxable value in place entirely at the level it sits when you file. From that point forward, even as surrounding property values rise and your neighbors watch their tax bills increase year after year, your taxable value does not move. It stays exactly where it was when you filed. When you look at the actual numbers by state, the scale of what is being left on the table becomes very clear. In New Jersey, the Senior Freeze program can reduce a qualifying homeowner's tax burden by up to $6,500 annually. In Texas, seniors who are 65 or older receive an exemption that reduces their school district taxes by roughly $938 per year, and that is before accounting for any additional local exemptions that may apply. In New York, recent legislative changes have expanded how much localities can exempt from a qualifying senior's assessed value. In Illinois, the assessment freeze stops the taxable value from rising at all, which, in a market where home values have been climbing consistently, translates to savings that grow larger with every passing year. Projected over 10 years, a qualifying senior in New Jersey who files this application and remains in their home holds on to $65,000 that would otherwise have gone to property taxes. In Texas, the figure approaches $10,000 over the same period. These are not symbolic amounts. This is real money that belongs to real homeowners who simply were not told the form existed. Something that receives even less attention is the retroactive filing option available in a handful of states. If you qualified for this exemption in prior years and were never aware of it, certain states allow you to go back and file for those years after the fact. Texas permits retroactive claims going back 2 tax years. Illinois allows claims going back 3 years. For someone who has been eligible for several years without knowing, that could mean a meaningful credit or refund for taxes already paid. No special process, no legal representation required. Just the same application, submitted for each prior year the state allows. The reason this situation exists on such a large scale comes down to one straightforward reality. These exemptions are not applied automatically. When you turn 65, nothing changes in your property tax record unless you take action. There is no government system that identifies newly eligible homeowners and notifies them. There is no letter that arrives in the mail. Your tax bill continues to arrive for the full amount as though nothing has changed. Because from the county's perspective, nothing has. You have not filed, so the exemption does not exist for you. The AARP Foundation recognized how serious this problem was and built an entire volunteer program around it, dedicated specifically to helping seniors navigate these applications. The fact that such a program became necessary and that it has helped seniors access close to $10 million in tax relief over recent years says a great deal about how many people are still being left without this information. Deadlines add another layer of difficulty. Each state, and in many cases, each county, sets its own application deadline for these programs, and those dates are almost never communicated directly to homeowners. Florida closes its additional senior exemption on March 1st. New York City closes on March 15th. Texas closes on April 30th. Colorado extends its deadline as late as July 15th. None of these dates appear on your annual tax bill. No reminder is sent to your home. If you do not already know to look for the deadline, it passes without any warning and you are locked out for another year. The most common reason eligible seniors never claim this benefit is simply never finding out it exists. But among those who do find it, the most common reason their applications get rejected comes down to a mistake that is entirely preventable. Most counties administer several different senior tax relief programs at the same time. The Senior Homestead Exemption is one form. The Senior Assessment Freeze is a separate form. The Circuit Breaker Credit is yet another. The standard homestead exemption available to any homeowner regardless of age is different again. Each has its own eligibility rules, its own deadline, and its own application. When a senior submits the wrong form, the county does not redirect it to the right program. They process what was submitted, find that it does not meet the requirements for that particular program, and deny it. A letter arrives weeks later stating that the application was unsuccessful, and in most cases, the senior never learns that they actually did qualify, just for a different form than the one they filed. The second most common cause of rejection is missing income documentation. The majority of states with senior exemption programs set a household income limit for eligibility. When an application arrives without the required proof of income attached, it is automatically denied, not sent back for correction, not flagged for follow up, denied and closed. The required documents are typically your most recent federal tax return or your Social Security award letter. Both need to be attached to the application at the time of submission, not mailed separately afterward. Beyond the exemption itself, there is another tool available to senior homeowners that almost no one uses, and it can work alongside the exemption to increase total savings even further. Every county in the country has a process that allows homeowners to formally challenge their assessed value if they believe it is too high. It is called an assessment appeal, and it costs nothing to file. County assessors handle enormous volumes of properties, and errors in assessed values are not uncommon. If your home has been assigned a value that is higher than what comparable homes in your area are actually selling for, you have grounds to request a review. Supporting your case with recent sale prices of similar nearby homes, a recent appraisal, or documentation of your property's condition is usually sufficient. If the appeal is successful, your taxable value drops. And when your senior exemption is then applied to that already reduced number, the combined effect on your annual bill can be considerably larger than either tool would produce on its own. There is also a separate program in many states specifically designed for seniors whose property taxes represent a disproportionately large share of their total income. Commonly called the circuit breaker credit, this program provides relief when your tax burden exceeds a reasonable percentage of what you earn. It was created specifically with fixed income seniors in mind. Importantly, qualifying for this program and qualifying for the homestead exemption are not mutually exclusive. Many seniors are eligible for both, and filing for one does not affect eligibility for the other. If you're living on a fixed income and a significant portion of it is going toward property taxes each year, it is worth asking your county assessor's office whether this program is available in your area. Here is exactly what you need to do starting today. Verify your eligibility first. The typical requirements are being 65 or older, owning the home as your primary residence, and meeting your state's income threshold if one applies. Look up your specific state's rules directly from your county assessor's official website because requirements vary and you want accurate information. Once you know you are eligible, find the correct form. Go to your county assessor's official government website and search for the Senior Homestead Exemption application for 2026. Use only the official government site. Third-party websites may have outdated or inaccurate versions of the form. Before you begin filling anything out, gather all of your supporting documents. You will need proof of your age, either a driver's license or birth certificate. You will need proof of ownership, which can be your deed or a recent mortgage statement. And if your state has an income requirement, you will need your most recent federal tax return or your Social Security award letter. Have all of these in hand before you start the application and submit them together as a complete package. Look up the specific deadline for your county right now. Search your county name and property tax exemption deadline 2026. Write the date somewhere visible, put it on your calendar, and set a reminder for at least 2 weeks before it arrives. There will be no official reminder sent to you. Submit your completed application with all supporting documents to your county assessor's office. You can typically do this online, by mail, or in person. Whichever method you choose, keep a full copy of everything you submitted and make note of the date you sent it. If you believe you may have been eligible in prior years, contact the assessor's office directly and ask how many prior tax years your state allows for retroactive claims. Submit a separate application for each year that qualifies. And while you are on your county's website, take a few minutes to look at your current assessed value. Compare it to recent sale prices for similar homes in your neighborhood. If your assessed value looks higher than it should, ask the office about the appeal process. It is free, it takes minimal effort, and if it is successful, your savings from the exemption will be even greater. This is not a special benefit or a new government initiative. These programs have existed in state law for many years. The only reason millions of seniors are not using them is that the responsibility of finding them, filing them, and meeting the deadlines rests entirely with the homeowner, and the system does very little to make that easy. Do not let this be another year where the deadline passes and nothing changes. The information is out there, the forms are available, the savings are real, and they are legal, and they belong to you. All that is required is taking the first step today. Share this with any senior homeowner in your life because there are people right now who have been overpaying for years and simply have not yet had someone put this information in front of them. Subscribe to the Senior Support USA channel for more content that is actually useful to your daily life. Take care of yourself.